Good afternoon, everyone. Welcome to our webcast on selecting an option strategy. I'm Connie Hill. I'm happy that you have joined me here today. It has been a very busy day here on the Schwab Network. Now, sometimes people have a question. They're like, how do you decide between maybe doing a long vertical or a short vertical? Because they're both verticals, right? We're going to explore that a little deeper today, see what things you might take into consideration as you're trying to decide which between those two particular option strategies you might do. Now, I am joined in the chat by Cameron May. He's a fellow coach and colleague and friend. Cameron's very knowledgeable in the market, so as you have questions, go ahead, chat those in. I'll keep an eye on our chat, catch which questions I can. There could be some things that I missed that Cameron will help us out with. So do let us know. Now, I hope you're following us on X. I'm Connie Hill CS. Cameron is Cameron May CS. We'll post educational content throughout the week, things that we find interesting in the market. We'll go ahead and share those with you. It's easy to do and free to join, so you might as well get those little tidbits in your trading information knowledge during the week. Let's go through our disclosures, and I'll lay out our agenda here for today. Options carry a high level of risk and are not suitable for all investors. What we talked about today is for general information and educational purposes. Don't consider it a recommendation. We'll be using the Paper Money software application. That's what you download to your personal computer. It's the most robust version of Thinkorswim. I think it's a fantastic tool as you're learning and maybe training on strategies, as well as how do you work the interface. Investing involves risk, including the loss of principal. Multi-leg option strategies will involve multiple commissions. Past performance of any security or strategy does not guarantee future results or success. One thing you need to know is that short options can be assigned at any time up to expiration time. In the Paper Money, it will not do that. It won't assign you early. And so you want to be aware, and I point some of those situations out to you, or maybe in a situation in an example trade we're doing, we might have something that could have actually been assigned to us early. So we just like to make you aware of those differences. There is no guarantee that the execution of a stop order will be at or near your stop price. However, that's the intent and why you put it in there. Now, I want to make you aware of some events coming up. And my understanding is these are filling up really quickly. So if you think you might want to attend one of these three events, or those that are even further out, we've got all of them posted out there for this year. Go ahead and register quickly before they fill up. Okay, so in a couple of weeks, we'll be in Scottsdale, Arizona. That's a 2-day workshop, option strategies and technical analysis. Actually, technical analysis will be on the first day. Same thing in Detroit, technical analysis and option strategies. And then in Chicago, we have one of our 5 advanced option strategies that we'll be doing this year. So if Chicago's convenient and you feel like you're a little bit more seasoned of a trader, ready for some additional information, maybe some of the advanced strategies, that would be the one to go for. Alexis says, looking forward to the Dallas one. Excellent. We'll be looking forward to that as well. So glad you've got your eye on that, Alexis. Sounds good. Now, in our class, we like to look at the current market conditions because many times that'll dictate to us what kind of strategies we think might be most beneficial. And then we'll kind of talk about the different strategies we could employ, and we're going to look at a lot of examples here today. Kind of tease things a little bit by saying, how do you choose between doing a short vertical and a long vertical? And we're going to get into the details of that today. Let's go ahead and take a look at our Thinkorswim. Let's jump over to the charts. And on my charts, I have a 10-day exponential moving average. That's this blue line. This red line is a 30-day simple moving average. And then I've got volatility down here, because volatility can be an indicator or something we consult with to determine, hey, do we want to, explore something that has high volatility or not? Okay. So the SPX looks like maybe it eked out a green candle today and was up ever so slightly, 0.03%, which is not a whole lot. Let's see where the NASDAQ closed. And it looks like the NASDAQ closed just down maybe about 0.3%. And maybe we'll just kind of zoom in here a little bit. It's interesting because on the NASDAQ, it's getting close to that all-time high here a couple of months ago. But if I were to draw a line in here, maybe connecting that top, you can see I had a diagonal line there before. If I were to come out here and see where this diagonal resistance is coming from right now, it might look a little bit more like that line that I just drew, because we had a lower high, more recently another lower high. And so we're kind of seeing the lows get higher and the highs get lower, forming a little bit of a triangle formation. And so some traders might say, well, let's wait and see what direction it breaks, see if it really does go to the upside, or if it maybe breaks down here on the downside. It could stay between these little boundaries. Ideally, would like to see it break out before these lines cross and they have that apex. So we'll kind of be keeping our eye on it, recognizing lower highs is an indicator that maybe things are slowing down. If I go back here to the SPX, I didn't do any additional drawings here, but what I might want to kind of implore to you is basically both of these moving averages are going sideways. So our intermediate moving average is sideways, our short-term exponential moving average is going a little bit sideways there. And again, if I were to draw in kind of the peaks, what the candles have run to, we might be starting to see a pattern of some lower lows, lower highs rather, along with our maybe slightly higher lows. All right, last one we'll take a look at here. We'll just look at the Dow Jones Industrial Average. It's only 30 stocks on it, but it really is one of the bellwethers that people will take a look at. You know, how is that big industry going? There's maybe some resistance up here around that 45,000. It ran up to it again. So same type of thing. We're maybe seeing a little bit more strength here because the 10-day moving average is still moving up, even though the 30-day is flattening out. So overall, kind of looks like as far as the indices go, maybe we're starting to see a little bit of weakness creep in. Now, we always want to see what the volatility is doing, right? So let's go ahead, let's pull up our VIX. And let's get a little bit more time frame here. Let's go out a couple of years, because I want you to have some context here for, you know, where is volatility high, where is volatility low? And here, we can see maybe lows were around 10, kind of, I'm going to say in a 10 to 12 to 14 range. Okay, let's say 10 to 14 is something that's relatively low. In the last 2 years, we've only had one big spike. Okay, that was here on the 5th of August. That was some news coming out of Asia, where the carry trade was changing up what had been going on. And so there was a big shift in their market, which then when our market opened up, translated to a lot of fear in our market. But you can see it just lasted that one day, but it really did spike up. So I'd say, yeah, that's an extreme point up there at 65. If we zoom in to kind of more recently, it seems like our higher VIX numbers are going to be like 23, 24, 25 is when maybe we're starting to see a little bit of choppiness, a little bit of weakness. But if we were to see the VIX go beyond that, then we'd say, yeah, we're starting to see quite a bit more volatility. So it's just kind of packed in here pretty tight as far as the put-call ratio on the VIX. So what would we say about fear in the marketplace? Say maybe there's a little bit, but it doesn't seem to be tremendous. It more, I would say, is a reflection of what we're seeing in the bigger indices of starting to see some weakness or some slowing down. Now, when you're thinking about, okay, what kind of strategies might that direct us to? Let's go back and look at the different strategies that we do have available here. And we've got them all organized in terms of bullish ones, bearish ones, and neutral strategies. Okay. And I will say within the categories of bullish strategies, there's some that are more directional and some that are less directional. Okay, for example, a long call, let's say, yeah, that's quite directional. We'd absolutely want the stock to go up if we were trading a long call. Versus if we did, say, a long call vertical, we've got a little hedge in there and that helps us out. And so maybe we wouldn't be looking for such steep action as we might on a long call. Short put vertical, that is bullish as well, but it's kind of a bullish to neutral strategy. where we might be able to put on a trade, and if the stock just stays flat, doesn't really go anywhere, sometimes it can still work out really well on a short put vertical. Okay, so within these, same thing here, the long put much more directional, short call vertical would kind of be the counterpart to this short put vertical, where maybe if it just kind of goes sideways but stays below a certain point, still could very well be a successful trade. In fact, we talked about that a little bit last week, that you don't have to be perfect. This wasn't in this class, but my short verticals class, you don't have to be perfect in order to have a profitable trade. Okay, and I would say anything here in the synthetics would definitely be very directional, right? Because you've got two bullish positions here, two bearish positions here. And then we have some that are really quite neutral, maybe even a little bit more neutral than what we're talking about, the short verticals, okay? So those can be a consideration sometimes as well. We don't spend a ton of time on all of those strategies, but we do kind of want to say, well, what's the market giving us? What might be appropriate? So as you're thinking about this, I just want you to answer to yourself what you think might be one of the more appropriate strategies, okay, whatever that happens to be. Cameron, thank you for putting that link out in the chat for people who are interested in registering for any of those workshops. Appreciate you putting that out there so they can just easily click and get themselves over there. Well, I kind of hinted to you a little bit earlier about how do you decide between a short vertical or a long vertical when we're sizing up some stocks. 4 of these. I'm hoping we can actually get all of them, but I'm not so sure that we can. We'll see. All right. FCX, Freeport-McMoRan. We know there's potential tariffs coming into play, possibly. Who knows? It changes every day, right? But if indeed that happens, you know, we'll see here what happens with these. This is a mineral mining company, Freeport-McMoRan. You can see it's been doing lower lows, lower highs, lower lows, lower highs. A couple of yesterday, I think it was, on X, I posted a picture of this without today's price action because it was yesterday, and I said, are we going to break through? Is it going to break through the resistance, or is it going to use that resistance and then just roll right down? Well, guess what we're getting today? We're getting the roll down off of resistance. Now, this is not a terribly high price stock. Many times with bearish trades, I like the price of the stock to be at least $40 because I want there to be a lot of room still to drop. We're still going to work with this particular one. But just know when you have stock prices that are a little bit lower, it can be a little bit more difficult to be able to find the kind of trade you want. All right. Now, this stock traded over 13 million shares, so it's very liquid. On this as well, we're going to use the March 21 options. Why? I haven't anticipated maybe using the March 7 expiration date series, but all of the strike prices that I wanted to use, not all of them were as liquid as what I'd like to see. So in that case, we just come out to the monthlies because typically we are going to find that open interest here, and we're seeing thousands of contracts. So same thing, we're going to look for a short call vertical to set up. We're just going to kind of repeat the process of what we did with our first trade. So on here, let's see if this still looks good. It was looking a little, actually, we're probably going to have to shift this a little bit. I had initial, I'll pull up what I had on here initially, but I think I'm going to shift it. We were going to do 42. Actually, we weren't. We were going to go, I think I was going to go 40. We're going to go 40, 42. Okay. There's a $1 wide spread here. Let's talk about this for a minute. Those of you that are in a smaller account and find yourself in a position in order to really keep with your position sizing rules, you might be happy to just be able to see that you could trade one contract here. Those of you that maybe, in this case would be what's a buck minus 27, you would have at risk 73 cents. Okay, so if you're, say you can only risk $100 or $200, let's go with 200, you could do 2 contracts here, okay? And so it can be helpful, but those of you that maybe are in a situation in your account where you can trade more contracts, okay, you have a higher threshold on your risk, you might want to spread it out a little bit. So here what you might consider doing is go 41, we'll go out of the money a dollar more, we'll have to make it a 42. So for a maximum gain of 46 cents, we would be risking what? Basically a buck. We're going to take $2 minus the credit, so that we'd be looking at a $1.54. All right. Wanted to point that out to you now. In our class account, we're going to allow us to risk $750 per trade because we're going to do both the long and the short here as well. So 750 divided by, what did I say that was going to be? A $1.54. I forgot to put the decimal in, but basically we can do 4 contracts here. Okay, we'll shift the decimals on our own. So we can do 4 contracts, which we're going to do. If you didn't like this, I didn't do the return yet. Let's do the return. It's actually going to be a decent return here, which is interesting. If we have 46 cents divided by our max loss of a $1.54, it puts us at about a 29% return. Okay, with the 34 delta. Now, some people have a rule that they want to at least get a 1 percentage point for however many days are left in the spread. Okay, some people have that rule. We're not enforcing that rule in our class here. Okay, we're going to go with the 29% return. It's almost 30%. And sometimes that's where people's threshold might be, something in that area. Well, let's go ahead. Let's put in our order to say, let's go close it out if we get a chunk. Okay. So in this case, let's go 70%. Okay, if we get 70% of our 46 cents, that means only 30% is left. So we'll multiply that by 0.3. That says go buy it back for 13 cents. Okay, so that's what we're going to do. Create an opposite order. Going to put it out here for 13 cents. Would say yes, go buy it back. We're happy with 70% of the potential max gain versus trying to hold out for most of it, right, or all of it. Let's go ahead. We're going to hit confirm and send, and we're going to put this in our option strategies bucket. All right, let me look here real quick. Dragon says it was a good thought. I was getting crazy. Ooh, what was that about? Oh, somebody said maybe there was a beeping noise. I didn't hear a beeping noise myself, so not really sure where that comes from. Okay. Now here, what we're looking for is we want the stock to stay below 40. So usually what I'll do is I'll come out onto the charts and I'll draw in where that short line, where that short strike price is. So I'm going to just put a line here about 40. I'll get as close to it as I can right here. That's about as close as I'm going to get right now. So this stock could continue to drop. That would be nice. It could go flat. That would be okay too. It could mosey on up a little bit. All right. And sometimes stocks will do that. They will, maybe come down a little bit, maybe go up a little bit. But we've got quite a bit of leeway here, right? The stock's at 37.59 and our short strike's at 40. So we've got a little bit of leeway there where it doesn't have to be perfect. It can even go up a little bit, which we don't want it to go up, but it could, and it still could be a profitable trade. Now let's do its counterpart. Let's go do a long put vertical on this side of things. Strike prices I was considering using here, let's see if they still make sense, was 38 and 36. And so 38 is technically our at the money strike price. If you wanted to be more conservative, you could go a little in the money. You could go 39. We're just going to start at the money here. So we're going to say buy vertical, and we will stretch it out by 2 strike prices again. So instead of doing 37, we're going to change it to this 36. So on our 36, well, actually, let me leave it here for a minute. Again, if you're in a smaller account and you really need the flexibility to do a trade that has $50 at risk or do 2 contracts for $2 at risk, this gives you a possibility to do so. Okay. Some of you are not in that boat, so it may not matter to you. You might want more efficiency. So in this case, we're going to go for a little bit more efficiency. So the cost of the trade would be 89 cents. We take $2 minus that, $2.11 is what we would have at risk. Okay. So let's give you a percent return, theoretical here, right? So we're going to take our max reward, which we decided doing the math is $1.11. We're going to divide that by the max theoretical Oh, I did that backwards again. With the theoretical gain. Oh, I did that right. Okay, divided by the max theoretical loss or net debit, 89 cents. And that one is actually coming out to be 112%. Okay. But it's got to do more than what the short vertical was going to do, right? We are asking this stock to drop below 36 because that's our short leg. Let's see where 36 is. All right, so 36, I'm going to kind of pencil this in here about as close as I can. That's close enough for the moment. We actually need it to move. We need it to go down. We'd want it to come down here and expire into there at options expiration. And we have over a month to let that occur. All right. Doesn't have to do it quickly or immediately. It can wander a little bit if it wants to. But the idea is it does have to have that movement. And so just knowing that and kind of drawing it out on the chart might help you decide where do you feel most comfortable. Do you feel most comfortable because, man, you think this thing is going to continue to drop like it had been doing? Or maybe you're just not quite so sure, but it would be nice to maybe have a little bit of freedom for the stock to go up, all right, even a little bit, or drop, okay? Same thing, we're going to put this one in, and if our max theoretical loss here is going to be 89 cents, and we're willing to risk 750, let's divide 750 by 89, and we can do actually 8 contracts here. So we're going to do it. And again, we will be comparing these. 7, 8. Let's make our first trigger sequential. Let's go through the math again. Create an opposite order. Because short verticals and long verticals, how you calculate that is a little bit different, right? From the credit spread to the debit spread. So in this case, our max theoretical gain here should be $1.11. And let's say we get 70% again. That's what we did on the call side of things. So we're going to multiply that times 0.7. That gives us a value of 77 cents. Okay. We're going to add that to the 89 cents. Let's see if this will keep it in its memory here. Okay. At 89 cents, we'd go buy that back at $1.66. All right. Again, it is so nice to have that sitting out, just ready to go. Where you're saying, I'll be satisfied at this point if I get 70% of that max gain. Great. Let the system execute it for you. Again, you don't have to be there trying to catch it. And, you know, it's a great feeling to come in and log into your account and it's already hit your target for you. You're like, sweet. That is a happy camper time. All right, we'll put this one as well in our option strategies. Let's go ahead and send this through. Now, there's one trade I wanted to make sure that we talked about. Sam says, would you consider selling at X% profit? I think you may have typed that in before we actually got to that point. So yes, absolutely. You could use 60%, Sam. You could use whatever number you're comfortable with. Some people might say, man, if I get 50% that first week, I am out. I'm not going to wait for it to dink around. Okay. 60%, 70%, 80%, whatever your comfort range is. And after you start paper trading some, seeing the kind of stocks that you're using, you might get a better feel for that than maybe what you have right now if you're haven't really been doing verticals for a long period of time. Okay. Appreciate that. All right. One trade we need to look at. Let's look at the monitor tab first. We'll collapse that out of the way. And those are our new trades. The one stock I wanted to talk about here is Path. On Path, we sold a short put with the idea that we didn't care if that stock was put to us or not. We liked the stock. Okay. We collected 51 cents. And so if the stock is put to us at $14.50, the strike price, kind of in your head, you can say, well, I'm going to offset that by what I brought in here. So then my net debit on it is going to be what? $13.99. Okay. That we would get the stock roughly for that price because of that credit. Now let's go look at the chart here. Oh, and there are only 10 days left? Yeah, there's 10 days left, which really tomorrow means 9 days. All right. So as we pull this one up, let's take a look. Let's just kind of look at it more recently. We looked at it on this day when it was having a big breakout. And it looked like it was going to move really well for us. Okay, definitely a bullish entry. What has it done since then? Well, it's just kind of gone sideways. It's pulled back, hasn't really demonstrated what we thought maybe it would do as far as continuing to go up. It really is not doing it. Our expectation is that maybe it was going to run up here around the 15 and change area. It hasn't. Now, I also have a diagonal support line here. And it looks like it's a little bit below it right now, but it doesn't look like it's conclusively broken that support area, okay? It has not formed a lower low, right? Here's the previous low. We can see where it came down here today, so it's not quite there. So trend hasn't changed. There may not be a reason to get out of it. So I want to see if we actually get put to stock, okay? Let's go into next week. In paper money, we won't be assigned early because that's one thing paper money doesn't do. And it really hasn't been here. It's been below our 1450 strike price. So technically, in a live account, if there weren't a lot of contracts, it's possible we could have been assigned, during these times when it was below the 1450. Now, technically, it can happen regardless of the price of the stock. Okay. Usually it doesn't make financial sense for somebody to do that and exercise their end unless it puts you at a disadvantage, okay? So I want you to be aware of that maybe in a live account, there's a possibility it could have already been assigned to us, all right? We're gonna leave that on there. We're gonna watch it. And if it comes down here to a point where it would meet your rules that you would wanna sell it if you had the stock, then somebody might decide to get out for a small loss on it, or what we would hope would be a small loss. We'd have to see at the time what it is. Right now, it's a small loss where it's sitting right now, right? We're down 1650 on it, which is not a tremendous amount. All right. Whoa. Let's see. Nancy says there was so many you had on your watch list that it's sad we had a down day. The market just does that to us, doesn't it? Would be nice if we could control it, but we can't, obviously. All right. Now, what I would like you to do and take away from this session is, as you're setting up and looking at your trades, and let's suppose you're newer to doing verticals, maybe go through that exercise in your paper account that we did here in our class account, our example trades, and maybe get a feel for, which ones you might prefer. And if you want to put these ones in on your account, in your paper money account, and test it, then you might be having questions pop up that we can answer in our session next week. Now, it does look, and I'm just noticing this now, there is a survey out in the chat. You guys know that from time to time, we'll put out a survey and ask for your response on it. It's super easy, 2 questions. You just fill in the radio button. 1 to 10, just plop, whatever you're filling is on a scale of 1 to 10. There's a second place that you can answer questions if you want. It's a place, you can just type what you want. And if you wanted to use that to communicate something to me, like maybe you're interested in a problem being solved that you're having issues with, or a particular strategy you're interested in, use that space to let me know that as well. And I love to incorporate your questions into the strategies that we take a look at. All right, well, this ends our Schwab coaching for the day. We'll be back bright and early tomorrow morning, 9:30, right at the opening bell. We'll have our Trader Talks discussion. So a couple of asks, fill out the survey if you will. Subscribe to our channel if you haven't already. I think a lot of you already are subscribers, but then it just lets you find our content so much easier if you become a subscriber. I love that function in YouTube, because I subscribe to quite a few different channels. And then, of course, if you want to follow Cameron and I on X, we would love to have you. All right, you guys have a great evening. We'll follow up on those 4 trades next week. We'll see you then. Bye-bye.